4 weeks ago. So here we are. I was waiting for London to show a little bit more of what it's gonna do. I believe I know where today is gonna go. And I believe it's going to be a typical Friday high ADR to low ADR day. Now, I might be proven wrong, but that's the direction that it seems to be heading into. Now, we're going to start with the news today. We have the PMI news today across the board, EU, UK, and US. So that is going to bring volatility. For sure, Powell's speech was quite uncertain. He did stress out the long-term projection for the current economic situation. The market did get what the market expected in terms of the rates, but the market don't. So again, I'm taking this with a pinch of salt, and I'm not gonna be taking it as a signal in any way, shape, or form to trade. Again, if you're trading FOMC days, you must be mad because they are quite intense. Yes, they could be traded on the smaller time frames, but you probably need a week off after doing one of those days. So today, big news today coming out will bring volatility. The S&P has been going as projected down. Once we closed below the 50 here, which was Tuesday, I was telling you on the chats that we're coming down. I don't think we'll stop until we hit the 200 EMA, which is supposed to be tested. Now, I'm not going to be a doom monger today, because I believe that what's happening across the board has two possibilities. It could be a back test, a much needed back test for a proper bull run to start, or it could be a back test up again for a lower high, and then down we come for a bigger retracement. Both situations are still on the table. The reason why I am inclined to believe that it is the first, as in we're going to see a shorter back test and then continuation to the upside, is the weekly stochastics. I'm going to do a more in-depth analysis of the weekly stochastics on Monday, because I'm waiting for this week to be finished and see where we close. But where the daily and where the weeklies are at the moment, it sort of signals that we are going to head for a weekly lift. Now, not necessarily next week, but quite soon when this retracement is finished. So the S&P is coming down. Again, I believe this has more to do with the general climate. Now, again, people are saying that there is demand in buying crypto. People want to avoid the CBDCs, which will be highly monitored and regulated. So there is demand for the market. There clearly is buying pressure. I was looking at ETH yesterday dropping through support, and nothing was happening. Like it did a 4%, I believe, drop from the previous lift. And despite support being broken, there was no momentum. There was liquidity to the downside, but there constantly was buying pressure, keeping price action up. So I don't believe the theory that there is demand in buying crypto, but somebody is buying crypto. Could this be the market makers knowing what's about to come? Could there be, again, how can I say, bigger picture, longer term bigger picture players and long-term players in the market? Maybe. Could this be the market makers trapping shorts? Yes, as well. So a mix between all of these. The truth is that that nothing is certain in the market, and we need to trade accordingly. So take your profits, wait for high probability entries, minimize your risks. That's all I would personally do in this situation. because we don't have a trend. We don't have a trend for our coins. S&P is down, clearly down. The DXY is up, clearly up, has a golden cross, keeps going. It still hasn't broken this previous peak and needs to break it to turn it into a W formation and lift up. But it is inching closer to this area. And while it's going up on the daily, stochastic on the daily is turning down, which is generally a sign of strength. Despite momentum coming down, prices are going up. Loads of bearish divergences for the DXY again. I think Mr. Powell mentioned that there could be unknown factors out of their control. I believe he was talking, I was having a chat with Roy yesterday, and I believe he was talking about the China situation. So yes, if there is a, how can I say? If there is one such high impact economic event, we might see unusual correlations between the DXY, the S&P, NASDAQ, and crypto. Now, we need to break the previous high for the DXY to confirm this lift, and we need to break it significantly. It looks like it's going to happen, but until we do it, there's no telling where we are in this, except for holding support. This is, if I were to look at this as if it were a 15-minute pattern, I'd say wait for this to be confirmed and then back test and then continuation to the upside. So we're probably going to see something along these lines. Now let's have a look at BTC. BTC has been holding up quite well in terms of support. Now this is the daily. Again, we have the stochastic on the daily turn down. We have daily volumes going down. Now the volume is a very important indicator, and I was mentioning this on the chats when the lift was going on before the FOMC. I was saying, okay, this lift looks like it's about to continue, but the only thing that is not supporting it is the volume. The volume is like the MAs are lagging indicators because they are averaging the past. The volume shows us what is in the present. So that's why I believe it's so important to look at a drop or at a peak if they are supported by volume or not. This lift from this level of prices to this level of prices is not supported by volume. If we come down on the 4-hour time frame again, we will see that we have quite stagnant volume. If again I'm looking at yesterday's drop, we are going to see something a little bit different on the 1 hour, and we're going to see a little bit of an increase between here, and here. Again, I'm doing some very like an hour, looking at the hourly time frame to determine what can happen on the daily is quite unreasonable. But I'm doing this because I want you to see that there was buying demand here. When this one dropped and this one dropped, when prices are dropping and volume is increasing, that means there is buying demand. And that's what happened yesterday. That's why we saw a lift, and that's why I secured profit in my short position. It's closed at the moment. I'm waiting to see what today is going to do, because the previous one where I didn't take profit was a V-shaped recovery that took all my 50% profit off the table. On the 1 hour time frame, there was not a 1-2, it was straight up in a straight line on ETH. But yesterday, seeing the same thing, I secured profit again because it was hitting levels of support. Now that's what BTC did on the daily. So on the daily, it hit the 20 EMA. There were buying orders there. They got bought, and here we are holding the 20 on the daily. as long as the support is holding, I believe that we are going to move between this trend line, which is 27.7 and 27.2. When we break the 27.5 and the 28 mark, we will turn this one into a bigger W formation. At the moment, that's not confirmed. It's meeting resistance. Could we still come down and bounce off the 25.6? Absolutely, we can. And there is liquidity there. I loaded up the CoinGlass pages. Here it is, 25.3. There it is. Now it might still want to play the chop game and go up and catch this liquidity here, let's say up until 27.1, 27.2, and then come down to 25.5, 25.3. We could have that. So my levels for this weekend are going to be the following. Let me just put the, where's my, just a second. Oh, my recording. I'm going to put them on this chart and then transfer them on the MAs, because my recording button is where I should be loading the pages and I don't want to mess with the recording. But this daily triangle is actually quite relevant as a pattern. I used to have this line a little bit lower. I used to have it here. If we do look at it here, this would be the back test for continuation. So we might see that as well. Now Fridays are tricky days, because I have seen breakouts on Fridays, not too often, but I have seen them. Now a breakout trade would be breaking this previous high here. So that would be a low position here, low capital position with a stop loss below. If I change again, I would be watching the hour for this. I would be putting an entry here, 28,000, breaking the previous peak, and my stop loss would be below this. Now this is quite high. It's a 5% range. Don't think it's worth putting more than 5%. I think it will be 10% of the capital. So literally you should be watching it and seeing how it moves on, if it moves on. But yeah, even this previous peak could be the first step, then the second step, and so building up your long position. As a breakout trade, constantly having the stop loss below the 20 EMA on the 1 hour, because that should always stay as support. However, I wouldn't be looking, I myself won't be looking for positions today. I will be just watching today, tomorrow, and I'll be looking for positions before the Asian session on Sunday. Liquidity is about to just be moved around on Friday. It's the run for money, closing of the week, and generally it tends to go nowhere. Yes, there have been breakouts, but too rare to actually consider them the norm and to risk capital in this. So if you don't have a position open, I would suggest waiting until the next pre-market preparation day, which is Sunday. Even Tuesday is better than Friday, because we have the finish of the move that started on Friday on Monday, and then Tuesday starts the trend of the 3-day trend of the week. Very, very frequently. Okay, so let's go back to the 4 hour. This is the daily triangle, and I'm watching it on the 4 hour, and I'm gonna highlight the area that I believe that we are gonna move between, and then I'm gonna compare it to the daily levels today. Now, I was quite generous because I put the area of support of 27.8, 25K, that very, how can I say, very frequently seen and red area. We have the stochastic on the 4 hour up, we have the daily stochastic down, and that generally means more sideways is about to come. If we're looking at if we're looking at today's daily levels, the low ADR is 26.2. The high ADR is 27.2. So I've already mentioned the high ADR being the top of the range in that triangle. There's my MA chart. There we go. Here it is, 27.2. And the low ADR would be 26.2. That would be above the current. Yeah, it would be a little bit above the current trend line here. So that would be, according to Traders Reality, the low ADR, high ADR. Today, we might actually see a push down a little bit lower. Again, there's a lot of liquidity around 22K, especially on the 6-month chart. So we might actually see that, but the issue is now knowing whether we're going to see a lift up towards the 35K, a third peak before a bigger retracement, because this is a consolidation pattern in this sideways, and there should be another peak. We had 1, 2, 1, 2. There should be another peak, another drop, and then the decision. This is on the 4-hour time frame. There's a lot of chop, a lot of noise. Like, these are very protracted swings that happened on the 4-hour time frame, and that is this one here is spring, and this one here is summer. So that's where we are. I don't want to waffle on, because again, I'll be a little bit more detailed on Monday when we have the end of the week, and also the stochastic on the daily and the 4-hour will have a little bit more space to get in sync. We might have the daily turn down and the 4-hour turn down as well, in which case we will probably see a backtest of the 25K one more time. In the meantime, with one going up and one coming down, it's very tricky. If we're looking at the daily levels today, we are in between the high ADR and the low ADR. And if you're looking to trade the 15-minute, I would be waiting for one of them to be hit. At the moment, neither has been reached. So in the middle of the range, there is no position. Edge of the range, top or bottom of the range, is where we're taking position. So if it meets one or the other and it gets rejected there, printing 3 signals on the 1-hour time frame, that's going to be great, because that will most likely be an entry for the 4-hour. But I'll keep you up to date when that happens. At the moment, it is above the daily open. It's challenging the daily pivot, and if it manages to get through that, together with the M3, we're looking at the high ADR, possibly the M4 for the top of the range today. That's BTC. ETH is in a very similar situation, was a little bit more generous with the range, but again, nothing to write home about. I was quite happy with how I traded the FOMC day this week. I don't touch my Bybit during the FOMC. An hour and a half, there is no before, at least hours before and during the FOMC, I do not touch my Bybit. There's no positions. I've tried that. Some of them were successful, some of them were not, but I realized there's a great focus and mental energy consumption during that period. So there's no point. I'm just going to watch it and see what it does. But before the FOMC, I placed this order here because ETH was building up this wedge and it was moving quite regularly in it. And I put my stop loss above the 20 MA on the 1 hour. I had my stop loss line here. It came very, very close to my I had my stop loss at 1642, and FOMC spiking up reached 39.40, something like that. So very, very close to my stop loss, but the 20 on the 1 hour protected me then. So I followed it down, and here's where I took my profit. With this trade, I managed to put back the stop losses that I had to pay. It was 30%, but it was 70% of the capital, so 21% overall. And I managed to put back 3 stop losses that I had to pay in August and 1 stop loss in September, which means I am now breaking even and starting to cash in gains. At the moment, I don't have an open position. I don't believe, now this would be the measured target of the wedge, but I don't believe this is going to be met as the target of the wedge. Now, with this going up like this, it could continue down. The reason why I took my profit there is that I can see it going up to backtest the 200 EMA on the 1 hour, even the 50 EMA on the 4 hour, which would have been half of my profit, and then come down to do the 786. It might not do the 786. It might just start getting support and going up. We are back in the range for ETH. I'm going to switch this to the daily, and I'm going to, there we go. This is the sideways range. This is at the moment a rounded bottom. We are below daily support. So once we get back above the 20 EMA on the 4 hour, because I'm using it as a marker for the daily, I'm going to be looking for a long position. Again, I will be checking on the daily levels when that is going to happen, because how can I say it? This is a ranging market. The way the orders are being placed and liquidity is placed, just like BTC, there's liquidity on both sides, and when it is pulled with such high intensity around a $100 range, anything can happen. Now you can see on the 7-day, this is the exchange liquidation, this is the Binance. On the exchanges on the 7-day, let me replace this. There's a lot more liquidation right now from the long position, from the short positions going up, because shorts have been trapped. I think they played a very similar game as they did here. That's why I didn't wait for a 1-2 anymore on the 4 hour. It actually gave a 1-2 here. This is the 1-2. It wasn't as steep as the V shape, but it wasn't worth risking one of these candles that would have gone up to the 20 MA in a 4 hour interval. So again, it is a choppy situation. Getting paid less but more frequently in this situation, I believe, works out best or better compared to trying to catch the big fish. Now, I am waffling now. Sorry about this. Here we are again. I'm gonna put the same levels on. I'm going to remove my targets now and remove these fibs, because at the moment, there we go. At the moment, I'm going to also remove the wedge. I know the target of the wedge is 1530. I know that it's a very strong local level. And just by looking at this as a consolidation channel, we put it down at the breakout. There it is, a double bottom. And here it is. I don't know why I put it there. Perfect. This would be, I believe that this would this be a 786 retracement? Because at the moment we've done a golden pocket retracement. Yes, it would be close to the 786. There, which one? That one. Okay. And I'm taking, yes, this push down. Yeah, that would be around the 786. Quite hard to read these. I am actually happy not to go into what kind of zigzag pattern this is. I'm just counting the swings here. As basically as basic as that might sound, it's working out. And we could see, like with this double tap here on the support, we could see another lift here, and then another drop, and then another lift, and then another drop. Now, historically, the last 10 days of September are quite bearish. I'm not gonna trade that as a signal, but I am gonna think about it and look for very strong signals to long, as much as I do for very strong signals to short. So taking those 3 yeses on the 1 hour is quite a strong signal. I'm not doing the 15-minute because the 15-minute is to me too choppy right now. It would be worth it if you're watching every candle, but again, it's very intense. So the 1 hour 3 signals, ETH is not changed the ranges. It's still in the same space, and it looks like it's done now a proper 1 2 for a 3 4 for a 5, a bigger swing to the upside. Let's see what's going to happen today. I believe that we are in a similar situation to BTC, a little bit better if I'm looking at it because we're past the pivot. So we've done the daily pivot. We have 2 stop volume vector candles, which basically show that the market makers are not willing to push this price past it. But then you see all of this was market maker vector candle stop losses catching liquidity. I'm going to say manipulation, but it's actually them just playing the market. So we have this, we are above it. In my opinion, we're going to backtest. There's a lot to backtest here. 200 EMA, psychological low, yesterday's high, even the psychological high, New York might actually do that spike. So this is what I'm going to be watching for. If I do see a strong entry there on the 1 hour for a short position, of course, I'll be posting it. If I don't, and I see conflicting signals, I'll just wait for Sunday. That would be, again, I'm just putting that at the back of my mind while I go about my day to day and see if it's going to take us there. If it's just going to keep ranging here at the bottom, this is a strong signal for continuation to the upside. And we could be hitting that 1560, which was my target yesterday. We could be hitting that. My target yesterday was 1560, came down to 1566, and I took my profits at about 1579. So thereabouts. No, here, thereabouts. But it was interesting to see the kind of V-shape play, at least for the first 5 hours after that. Anyways, so that's it. That's where we are today. If again, Fridays they have served some nice entries. If the signals are strong enough, I would be taking them. If I don't have strong signals, if I'm twixt in between, oh, it's this or it's that, I'll be waiting till Sunday because there is no rush. That's when liquidity will start moving again. Thank you for today. I will see you on Monday in the morning. Have a nice weekend.